Welcome to the deep dive. This is where we cut through all the noise and really try to deliver the essential knowledge you need fast. You're
Exactly.
here because you want to get smart, but without, drowning in information.
Right. Information overload is real.
So today, we're diving headfirst into a topic that can, well, directly impact your bottom line. Business tax deductions.
A big one.
We're going to try and uncover how you can unearth those valuable deductions that so many business owners, maybe even you, might be overlooking.
Mm-hmm. It happens all the time.
Our mission for this deep dive is, essentially, to explore how a really thorough, almost investigative review process can lead to some significant financial discoveries.
Yeah, discovers is the right word.
And this isn't just about, like, a one-time tax savings. It's about improving your overall financial management, getting a clearer picture.
Definitely.
We'll be drawing heavily from the insights shared by TaxAssurances. They have this incredibly helpful video, How to Uncover Overlooked Business Tax Deductions.
It's a great resource, and this really is such a critical area for any business owner. It's often surprising how even seasoned entrepreneurs.
Right, people who feel they've got a handle on things.
Exactly. They can still miss valuable deductions. And it's usually not deliberate, not at all. It's often just a lack of specific knowledge or maybe not looking in the right places.
Or with the right mindset.
Precisely. This deep dive isn't just about the numbers you plug into a tax form. It's about adopting a more, let's say, holistic and proactive approach to understanding and, well, optimizing your business finances.
Okay, so let's unpack this common scenario that Mary, the expert from TaxAssurances, often talks about. Many business owners, doesn't matter if they're new or established, they typically go to their tax preparer with, their revenue summary and a list of known expenses.
The obvious stuff. Rent, salaries, maybe big purchases.
Yeah, the easy ones. And they feel like, okay, I've done my part.
And look, that's a good starting point, obviously. But the key thing Mary highlights is that the tax preparer's job, ideally, goes way beyond just plugging those numbers in.
It's not just data entry then.
No, absolutely not. It shouldn't be. Their role, really, is to be more like a financial detective, a partner, helping you unearth every legitimate deduction.
Okay.
They shouldn't just be receiving information. They should be actively helping you discover it. It's an investigative process.
That proactive approach sounds, well, quite different from what a lot of business owners might expect.
I think so, yeah.
So if the preparer is this financial detective, what does that actually look like? What are the specific steps they take? Because Mary details some really comprehensive and, frankly, kind of surprising methods.
It's definitely multi-pronged. It goes way beyond just, glancing at your main business checking account statement.
Okay.
So first, yes, they meticulously scrutinize your business bank statements. They review your business credit card statements. That's the baseline.
Standard procedure.
Right. They're looking for maybe miscategorized expenses, missed things, transactions that aren't immediately obvious. But here's where it gets really interesting and often uncovers the most overlooked deductions. They advocate for looking at your personal bank and credit card statements.
Wait, hold on. My personal accounts. That sounds, well, that might make some listeners a bit uncomfortable.
Yeah, I get that.
Why would a tax preparer need to see my personal finances for business deductions?
Yeah.
That feels like maybe crossing a line for some people.
It's a really common initial reaction, and it's a fair question. But the truth is, it's not about being nosy or invading privacy.
Okay.
It's about acknowledging a very common reality, especially for small business owners, sole proprietors, or startups.
Right.
Often just out of convenience or habit, maybe you're in a rush, business expenses get paid from personal accounts.
Ah, okay, like grabbing the wrong card.
Exactly. Maybe you bought an online course for the business late at night on your personal debit card, or picked up office supplies during a personal shopping trip.
I could see that happening.
Or paid for some subscription software on your personal credit card because it was just easier right then. Those are legitimate business expenses.
But hidden.
Hidden in plain sight, right there in your personal finances.
Yeah.
Uncovering those can add up to significant savings. It's just about making sure all the business spending, no matter which account it came from, gets counted.
That actually makes a lot of sense when you put it that way. It's easy to blur those lines when you're busy.
Very easy.
But the search goes even deeper, doesn't it? Mary also suggests looking beyond just financial statements. Things like calendars and emails. How do they help find deductions?
Oh, absolutely. Your calendar, Physical planner, digital, whatever you use, it's more than appointments. It's like a forensic trail of your business activity.
A forensic trail, huh?
Yeah, think about it. Every client meeting, every networking event, conferences you attended, business trips, each entry could be a breadcrumb.
Leading to what?
Forgotten mileage.
Right.
Meal expenses, hotel costs, maybe professional development fees you paid for at an event. I had a client recently, they reviewed their calendar and realized they'd expensed the flight for a trade show, but totally forgot about the 3 nights in the hotel, the daily meal per diems, the ride shares back and forth. The calendar reminded them.
Wow, okay. That adds up. And emails. That really is a deep dive.
Emails are an absolute goldmine, seriously. They often have receipts for digital stuff, invoices for services, confirmations for online subscriptions,
Travel itineraries.
even informal agreements sometimes. So many businesses run heavily online now. Your inbox is basically a digital filing cabinet for potentially hundreds of expense documents you might have otherwise missed.
Okay.
It's pretty easy to search for keywords like invoice, receipt, confirmation, just jogs the memory.
So it's less about just what you recorded neatly and more about everything you actually did.
Exactly, the full picture.
And to make sure nothing slips through, Mary even suggests bringing other people into this,
Yeah.
like assistants or spouses. Why involve them?
That's where the human element is key. Assistants, well, they often handle small purchases or make arrangements the owner might not even think about.
All right, the day-to-day stuff.
They might remember a specific vendor or some odd expense. And spouses, especially if they're involved even slightly with the business or just household finances, they can have amazing recall for joint expenses.
Or just remembering things you bought together.
Totally. Or those everyday, seemingly tiny purchases that actually add up. You know, honey, remember when we bought that special software for your project last spring? Boom. Forgotten deduction, potentially.
That kind of question, yeah.
It's about using every memory, every piece of documentation you can possibly find.
This sounds incredibly thorough. Like a full financial audit of your life almost.
It can feel like it, but in a good way.
So what are the immediate sort of tangible benefits of going through such a detailed process?
Well, the primary goal, the immediate one, is pretty straightforward.
Huh?
Put forward the best possible tax return for the business, maximize every legitimate deduction.
Right. Optimize the tax position.
Exactly. You ensure you're not paying a cent more in taxes than you absolutely have to. And that saved money isn't just a number, it's capital.
Capital you can reinvest, right?
Yeah. Reinvest, use for growth, build up cash reserves. It's about efficient reporting and immediate cash flow improvement.
Okay, that makes sense. But beyond those immediate savings, what's the deeper, maybe longer-term impact for the business owner? Because Mary really emphasizes this feeling of, like, satisfaction and confidence.
And she's absolutely right about that. This rigorous process, it kind of doubles as an incredibly powerful management tool for the business itself.
How so?
It forces you into a rhythm of financial awareness that goes beyond just tax season.
Okay.
By regularly reviewing your financial activities, maybe keeping a detailed journal using Excel, or ideally using accounting software, you gain a much clearer, real-time picture of your finances.
So you're not just looking back once a year.
Exactly. And this practice ensures you actually have the necessary receipts and documentation for expenses as they happen. It builds a strong audit trail.
Peace of mind.
Huge peace of mind. And it sets up really robust financial habits for the future. You move from being reactive at tax time to proactive financial management all year round.
And that lets you see spending patterns, maybe find waste.
Precisely. You understand where the money's going, you can identify areas to cut back, and you make much more informed strategic decisions for the business.
So it's really equipping yourself for the future, not just tidying up the past.
That's a great way to put it.
Can you give us another solid example of an often overlooked deduction? Something specific maybe listeners haven't thought about.
Sure. We mentioned bank fees earlier, small, recurring, easy to miss. But let's think about home office expenses.
Ah, yes, the home office. Always a bit confusing.
It can be. But if you use a dedicated space in your home regularly and exclusively for business, you can deduct a portion of your rent or mortgage interest, utilities, internet, phone, even home insurance.
A portion of all that.
A portion, yeah. Based on the square footage, usually.
Hmm.
And it's not just the big stuff. Think about that new ergonomic chair you bought for your home office or the cost of painting that dedicated room. Those count too.
Okay, good examples. What else?
How about professional development and education? That online course you took to learn a new skill relevant to your business.
Mm-hmm.
Industry conferences you attended, subscriptions to trade journals, even business books you purchased. These are all legitimate deductions because they directly help your business succeed.
Things that make you better at what you do.
Exactly. Or consider business meals. Entertainment deductions have changed, yeah, but business meals with clients or colleagues are still generally 50% deductible.
But people forget to track them.
All the time. Those coffee meetings, working lunches, they add up, but you need the receipts and notes on who you met and why.
Right. Documentation is key again. These are great examples of those smaller details that really accumulate.
They really do.
So if we connect all this back to the bigger picture, legitimacy, compliance, how does this meticulous uncovering process strengthen a business's position if, say, the IRS comes knocking?
That's a crucial point. The IRS basically wants two things. Proof that an expense was ordinary and necessary for your business.
Standard stuff.
And that you can substantiate it. Prove you actually spent the money with receipts, statements, whatever.
Right, documentation.
This comprehensive uncovering process, digging through personal accounts, calendars, emails, talking to others, it builds that critical evidence. It creates that robust, documented trail.
So if you get audited.
If you get audited, you can clearly show these expenses weren't just random personal spending.
Yeah.
You can demonstrate they were taken as a result of really trying to run the business, as Mary puts it.
Showing the link between the expense and the business need.
Exactly. It demonstrates a clear, documented link, which is vital under IRS scrutiny. It shows you're professional, organized. That provides immense peace of mind. It's like audit-proofing your records as you go.
Okay, so wrapping this up, let's summarize what we've really uncovered in this deep dive. The power of a really deep investigative approach to business tax deductions is huge.
Cannot be overstated.
It's about moving beyond just the obvious stuff and actively digging into surprising places, your personal accounts, your calendar, your email, to find those hidden, legitimate expenses. And the dual benefit seems really clear. First, you get a better, more optimized tax return, potentially saving real money now.
Absolutely.
But second, and maybe just as important, you gain this incredibly powerful management tool that improves your overall financial discipline, your clarity, and helps you make better strategic decisions down the road.
Well said. It's a win-win.
So as you, the listener, reflect on this, maybe consider not just what you know you've spent on the business.
Yeah, think beyond the obvious list.
But what forgotten, or maybe seemingly minor, expenses might actually be legitimate business deductions just waiting to be found.
How might a structured review, using these maybe overlooked sources like your calendar or personal statements, reveal hidden financial insights? And how could that strengthen your overall financial discipline going forward?
It's really about turning all that financial data you generate every day into a powerful strategic asset for your business.
Exactly.
Definitely something to mull over until our next deep dive. Thanks for joining us for this really crucial conversation.
My pleasure. Great topic.